Hey, welcome back. We're gonna continue with our charting series. There's a lot more that you can do to set up your charts. I'm gonna leave it up to you to set up your screens however you want. I'm just making it, full screen on the chart for visibility purposes. Anyway, up here you'll see some tabs, and the nice thing about this is you can add up to 10 tabs, so you can have different time frames if you want. So like here we can, how do I rename this? I can rename it like 1 minute. And let's get rid of the 1 year. And what you can do is you can right click this and copy the current tab. And you can make this like, let's say you're a day trader, a 3-minute chart is pretty common. And then down here, you'll have to select 3 minutes, apply 3 minutes to the chart, and then you'll get, every candlestick will be 3 minutes now. And you can just keep doing this. So what I like doing this for is I like having, like a monthly chart, a weekly chart, a daily chart, and then other time frames. So I can just click on the tabs here rather than having to mess with the settings down here. Okay, so we'll do that now. We'll do like 1 day, and then down here we will set it to the daily chart. Let's go like 6 months maybe. 3 minutes daily, 1 minute daily. All right. 6. Okay, yeah. And then we'll do copy current tab. We'll do 1 week. And then down here for the frequency, we'll change it to the weekly. And we'll look at, I don't know, 1 year? Yeah, we'll look at 1 year. Okay, cool. So, again, when in doubt, zoom out. A lot of people default to the daily chart, and I do as well. And certainly you can start here, but always make sure that you zoom out a little bit more, just to verify that whatever you're seeing is consistent with what you're seeing on the daily chart. We'll do 1 month as well. Shout outs to Howie. And frequency, we will change it to monthly. And we'll do, I don't know, max. Okay, cool. We're looking at the SPY today, which is the proxy for the S&P 500. The reason for that is because if we're looking for a market crash, if we think that the market's going to crash soon, we should, zoom out and go back in. So what do we see here? Well, we keep making higher and higher highs, but this was what? This was September. October we rebounded really hard. November is half over, so we can't really use this final candle as too much information yet. But what do we see here? We see the 9 period, in this case it's the monthly, the 9-month moving average moving sharper up. Same thing with the, I changed this to 21 by the way. In the first video, we said 20. It should be, well, I like using 21, but other people use 20. Same thing here, right? The upwards momentum on all these lines seems to be increasing. So from a monthly perspective, this looks really good. Let's see here though. Again, the RSI is curling over. You see how it dipped in September and then it shot back up really fast in October, and now it's in November, but it's curling over, partially because November is not over yet, but also maybe the growth hasn't been as quick. Also though, look at this, the peak here is higher than where we are now, even though the price is higher. This is what we call a negative divergence, right? So these two don't match up, which means one of these is lying to you. And I'm inclined to think that the price is lying to you, right? Also here, the volume, we have lower volume. The volume's decreasing, right? We have on the green candles, a lot of panic selling here. This was the March crash probably, yeah, 2020. But we're losing volume here. And that's not good. When you go up, you want to go up with strength. And with volume comes that strength. And we're losing volume here. Again, this last candle is our current month, which is only half over, so we can't really use this as information yet. But you know, from here to here, we're losing volume. That's down. This RSI is down. Let's look at the MACD, right? The MACD, it was the spacing between the red line and the green line here was wider here. Obviously in September we fell a little bit, and so now we're getting closer to what looks like maybe, I mean, this is still bullish, but if it curls over, if the red line curls over more and intersects with the green line, that's definitely bearish. And because this is a monthly chart, we won't know for several months to see if that will happen. So we'll have to just keep paying attention. Okay, so if we're not getting enough information on the monthly chart, we'll zoom into the weekly chart. And what do we see here? Curling up faster. It's about the same. This is about the same. This is about the same. The constant, you know, pretty constant rate. But again, volume here, we're seeing negative divergences. We're losing volume. Again, this week. Today is today Monday. Today is Monday, right? Tuesday. Today is Tuesday. So not enough information yet because the week hasn't closed out yet. But let's see here. RSI's had it back up. So this is bullish. Although we're slightly above where we were here for about the same level of the RSI. And on the weekly MACD, this is very bullish. The green line crossed over the red line, and we're pushing higher and higher. So this is bullish from a weekly perspective. So right off the bat, just using very basic technical analysis, we have to say that this is pretty bullish. Oh, I forgot to, sorry, my settings didn't save and I had to redo this. Bollinger Bands. Okay, so from the Bollinger Band perspective, see, we're above the Bollinger Bands on the weekly chart. And that means we're overextended. It suggests that, well, you know, again, it's all a suggestion. Nothing is, technical analysis just offers you possibilities and suggestions, not probabilities. Like, just because the charts say so doesn't necessarily mean that it will. It's just possible. It's possible that we have gone up too high, too far, too fast on the S&P 500, and this could come down soon. So the Bollinger Bands are bearish. Volume from here to here is bearish, but the MACD is bullish. I'm going to say the RSI is bearish. It's very slightly bearish, and it's only because we're slightly higher, even though the RSI level is the same as it was right here. Okay. Same thing here. So it has a higher RSI here, but the price was lower. This is bearish. So we got a couple of bearish indicators mixed with a couple of bullish indicators, so can't really tell. All right, zooming in again, 1 day. The 9 period seems to be slowing down. The 21 day slightly slowing down, maybe. This one, it's like accelerating here. It looks a little bit like it's slowing down here. It's too hard to tell. Again, less volume. RSI, we're like at the same price at a lower RSI, so this is a negative divergence. And then on the daily, the MACD, it looks like it's trying to bounce here, right? The red line looks like it's trying to bounce off the green line and head higher. But it also looks like these are so close that it very easily could turn bearish soon. And that would be bad for stocks. Now, I said I would do a video about the global dollar shortage. It's long, it's really complicated, and I'm still working on it. And from a macro perspective, from a global macro perspective, it's suggesting that the stock market is probably headed lower. But we'll get to that. So just be careful. That's all. Do your research, check the charts, be careful. And is there anything else? Daily chart. We could do an hourly chart. Why not? Go to 60 minutes. We'll go to a couple days, 5 days maybe. 9 period is slightly slowing down. This one's picking up, this one's picking up, this one's picking up. Losing volume. RSI leveling off, headed lower slightly. This is bearish, this is bearish. The red line here, you see how it's slightly slowing down, slightly leveling off? That's bearish. So this is bearish, this is bearish, this is bearish. These candles aren't very big. It looks like it's slowing down here too, and that's bearish. So yeah, we might pull back on the SPY. We'll have to see. But let me know what you see, right? Looking at volume and profile, there doesn't seem to be a whole lot of activity up here compared to down here, but especially not down here. Let's zoom out some more. Let's go to a daily chart. Yeah, there's not a lot of activity up here. There was a lot down here, right? When September didn't treat us too well. Went down. And then when bulls finally won, you see this big candle here? Anybody that was short the SPY flipped, but look, there's a gap here, and that gap could, there's some gaps here. There's this thing called gaps being filled. Basically, whenever you see holes here, basically, where there's no price action, no candles to confirm the move, that's a level that may get retested in the future. So be on the lookout for that. And make a note of these numbers too. It's like in the 535 area. 530. Let's see, this one was 436, sorry. 436, and this one was 438. So yeah, between the 436, 438, there's a gap. And that could get filled if it does start crashing. That's it for this one. Okay, see ya.